Right, welcome. You're looking at the weekly dollar. So a lot of what we're seeing in the market at the moment is based on what is happening with this dollar. So we're potentially coming back to the pre-COVID 2020 highs. Okay, the Fed chair, Mr. Powell, last week said that he thought inflation needed some extra interest rate rises. We could potentially have another 1.5%, another 150 basis points in the next 2-3 months. And so the market is, for the dollar, is perking right up. And we could go back into those highs. So that's the reason why we've seen weaker levels on, well, overall, but particularly even commodities. If we now look at the gold even on the weekly chart, so we knocked into this 2075 and got close to there, got in close to the 2000 mark last week, I think, wasn't it? And here we are at 1896, looking lower. You can see this main support here at 1835. So we look as if this is coming down on volume. So we do look lower here unless we get some quick turnaround on this support. We've got to break this support first. We're just sitting on it right now. Otherwise, if we really hit the skids, we could so easily come down to 1690 area, which was the lows of last year. All right, it may not get there that quickly. It may just be a slow grind, and this was a slow grind into 2020 and into 2021. We did the same. So we perked up and then ground lower, perked up, ground lower, perked up, we're grinding lower. All right, so at the moment, the oil is not happy. Sorry, the gold. Oil, talking of which, oil is sitting on a key level of support here at 96 and a half as we speak. But the main overall trend line would take us potentially right down to 77 if we lose our footing here. The main pre-war lows were down here at 90. So it could be they just want to come back and retest the breakout area at 90. If that's the case, then that could be a great opportunity to get in. But you can see we are some distance away from the overall trend line. So I'm keeping an eye on that. Short-term lower, longer-term higher. And let's have a quick look at the indices. Let's start with the Hsbc. It is coming right into support here. So we're only just open this week, and already we're coming into this key support. If this doesn't hold, then we could easily fall down to 6,700 and lower. It's very, very reminiscent of what happened here in February 2020. Albeit this was a pandemic, but this is under pressure from rates and so on. It's just threatening to break down harder. So be cautious. Dow is clinging on as we speak, but we've got 3 hours of trading to go before this Monday closes. So let me tie this up because it's important that we can see this one properly. Let's take everything off. So long-term trend line on the Dow, I would, in fact, let's use the tool, see what the tool says. Okay. Glad I use that because that's interesting. So this post-COVID low to stretching right underneath this current price level, but the main one seems to be this one here. So if all we do is kind of sit on this 33,000, then this could perk up and turn around. Otherwise, if we start losing our footing, we start breaking new 2022 lows, sorry, then this could so easily make all its way down to 29,000 and retest that level there. I'm going to take this trend line away because that one is more relevant. In fact, I'm going to redraw that. Yeah. Okay, so weakness, we need to be careful. Right, let's move across to stocks. Let's start with banks. So it's gone back to, I'm about break even. I've done a couple of entries on this. I'm about break even on the long side of the Barclays. It's a concern because the volumes are not there, and if we close underneath 140 anytime soon, that could come down to 130 on the Barclays. Lloyd's is sitting up a little bit better. It's had a good couple of weeks, well, it's had a good couple of months. We just need to hold on and see if this can stabilize and build from this 43 and then potentially go back up to 60 if that holds on that weekly chart. And Hsbc. Now this had a really good run recently, but this is looking lower. So I would expect 478 on that one. Right, let's move swiftly across. Let's look at the miners. They're all seeing a lot of profit taking on the back of that weak gold. I think next stop, well, we've hit 24 at the top. I think that's going to come down to 19. Sentiment. If that loses a footing here, that could drop quite significantly. But if all we do is sit on that trend line, then that is a buy, and that would trend line be 85, 87 on sentiment. Griffin sat up so well, but the volumes have dropped off. So be careful if you're in that one. Be careful. If you want to get in it, then hold off and wait for a pullback. That looks lower. That is Hsbc. And the US miner, CDE, the silver miner, really losing a grip. And that's even gapped down. So this is what could happen to the UK miners. So be careful. This is HL, US gold miner. Energy. Tallow. Pulling right back. So this is decent trend line down here. Huge amount of resistance at these highs at 65. So if we pull back into the trend line hold, tallow is a buy. If we pull back and don't lose our footing, then be careful. Petrofact, it had a good little run. It's had a good 3 weeks pushing higher, so it's just resting at the moment. Volume has been good. So at the moment, no reason to be overly concerned about this one, but we need to make sure we don't start closing underneath 110. Otherwise, that could go and visit £2 on Petrofac. Let's quickly look across to basic materials. We've got Rio pulling right back, Rio Tinto pulling right back. So if you haven't taken profits up here, then be careful. This could come all the way down to 47 or 50 area. These I like. I've been waiting for a pullback on this one. ELM, Elementis. I'd like to see 110 on that. It's currently 120. TPI cap pulling back. I'd like to see that come into 120. It's currently 134. And Man Group. This has been on a great run. It's 237. I like to see at least £2 on that one. So I'm going to be patient on these. Now, let's do a couple of shorts and I'm going to wind up. Card. This hit 61 and peeled right back. That's an impressive weekly bar. So I'm going to wait and see if that can get up to 64, 65 before shorting that. That's why I like looking at the weekly charts. But what I do like to enter now is shoe zone. We've got the daily on this one. I'm going to try and bid on 142 with a stop above 154. So I like this one very much on the short side. There's a gap down here at 91. So if I can get in this on a pullback, and then we can close lower on volume, then we might go and see that 91 gap fill. All right, that's all I've got for you. I'm not doing the midweek Wednesday reviews now. I'm going to start up some sessions on different aspects of stock trading. So watch out for that. I'm looking forward to that. I'm going to cover all sorts of areas to do with buying pullbacks in trends, reversals, scanning techniques, and so on. And particularly sector analysis as well. Sectors have been so important in this environment. You've got to be in the right, if you want a high probability of succeeding in profiting from trading, you have to be in the right sector at the right time. So we'll talk about timing and cycles and sectors as the programs go on. Okay, all right. Stay safe. A long weekend next weekend, which I'm looking forward to. Have fun. Bye for now.